Hello everyone. This video covers some of the most important and frequently asked interview questions and answers for junior accountant roles, suitable for both freshers and experienced candidates. We have categorized the top job-oriented topics to help you prepare effectively. First topic is accounting and financial accounting. What accounting principles do you follow in your work? Sample answer: I follow generally accepted accounting principles to ensure consistency and accuracy in financial reporting. These principles guide my work in recording transactions, preparing financial statements, and maintaining accurate records. What is your experience with financial accounting? Sample answer: my experience includes managing financial transactions, preparing financial statements, and ensuring compliance with accounting standards. I have worked on various aspects of financial accounting, such as journal entries, reconciliations, and financial reporting. What are the basic accounting principles? Basic accounting principles. Accounting principles are the fundamental rules and guidelines used to record and report financial information. They ensure consistency, reliability, and comparability of financial statements. Some key principles include: accrual principle. This principle states that revenues and expenses should be recorded when earned or incurred, respectively, regardless of when cash is received or paid. Matching principle. Expenses should be matched with the revenues they helped generate in the same accounting period. Revenue recognition principle. Revenue should be recognized when it is earned, regardless of when cash is received. Cost principle. Assets should be recorded at their original cost. Going concern principle. It is assumed that a business will continue to operate indefinitely. Consistency principle. Accounting methods and principles should remain consistent over time. Full disclosure principle. All relevant financial information should be disclosed in the financial statements. Materiality principle. Only significant items that could influence a user's decision should be disclosed. What is the difference between accrual and cash basis accounting? Accrual basis accounting, revenue and expenses are recorded when they are earned or incurred, regardless of when cash is exchanged. Provides a more accurate picture of a company's financial position and performance. Cash basis accounting, revenue and expenses are recorded only when cash is received or paid. Simpler and easier to implement but may not accurately reflect the true financial position of a company. How do you maintain ethical standards in accounting? Ethical standards are crucial for maintaining the integrity of financial reporting. Key principles include: honesty and integrity. Accountants should be truthful and trustworthy in their work. Objectivity. Accountants should avoid bias and conflicts of interest. Competence. Accountants should possess the necessary knowledge and skills to perform their duties. Confidentiality. Accountants should protect confidential information. Professional behavior. Accountants should comply with professional standards and regulations. What is the concept of revenue recognition? Revenue recognition is the accounting principle that outlines the specific conditions under which revenue is recognized. Generally, revenue is recognized when the revenue is earned, which usually means that a product has been delivered or a service has been performed. The amount of revenue can be reasonably measured. It is probable that the economic benefits associated with the transaction will flow to the entity. The costs incurred or to be incurred in respect of the transaction can be measured reliably. How do you prepare financial statements for external users? Financial statements are prepared to provide information about a company's financial performance and position to external users such as investors, creditors, and regulators. The primary financial statements are: income statement, shows the company's revenues, expenses, and net income for a specific period. Balance sheet, presents a snapshot of a company's financial position at a specific point in time, showing assets, liabilities, and equity. Cash flow statement, reports the company's cash inflows and outflows from operating, investing, and financing activities. Statement of retained earnings, shows the changes in retained earnings over a specific period. Next topic is reconciliation. What is reconciliation and why is it important? Reconciliation, the process of ensuring that two sets of records are in agreement. It involves identifying and explaining differences between them. Importance: helps in identifying errors, fraud, or omissions. Ensures accurate financial reporting. Provides assurance that the company's financial records are correct and complete. Can you explain the reconciliation process you follow? Sample answer: the reconciliation process involves comparing the company's internal records with external statements from banks or other financial institutions. I review all transactions, match them to ensure accuracy, and identify discrepancies. For discrepancies, I investigate the cause and make necessary adjustments. How do you handle discrepancies found during reconciliation? Sample answer: when I find discrepancies, I review supporting documents, such as invoices and receipts, to identify the error. I then correct the records and document the discrepancy to prevent future issues. If needed, I communicate with the relevant parties to resolve the issue. Explain the process of bank reconciliation. Process of bank reconciliation. Collect records, gather the company's cash book and the bank statement for the same period. Compare balances, compare the ending balance in the cash book with the ending balance on the bank statement. Identify discrepancies, look for differences between the two balances caused by timing differences or errors. Adjust for outstanding items, adjust the cash book for outstanding checks and deposits in transit. Reconcile the balances. After adjustments, the adjusted cash book balance should match the bank statement balance. Document the reconciliation process. How do you handle outstanding checks and deposits in transit during bank reconciliation? Outstanding checks: subtract the number of amount outstanding checks from the bank statement balance since these checks have been issued but not yet cleared by the bank. Deposits in transit: add the amount of deposits in transit to the bank statement balance since these have been recorded in the cash book but not yet processed by the bank. What is the difference between a cash book and a bank statement? Cash book: a financial journal that records all cash receipts and payments, including bank deposits and withdrawals. Maintained by the company and reflects all transactions from the company's perspective. Bank statement: a record provided by the bank that shows all transactions in and out of the company's bank account during a specific period. Reflects the bank's records of the company's transactions. How would you handle discrepancies found during bank reconciliation? Discrepancies can arise due to various reasons. Bank errors: contact the bank to resolve. Timing differences: adjust for outstanding checks, deposits in transit, etc. Book errors: correct errors in the cash book. Unrecorded transactions: record missing transactions in the cash book. Explain the process of reconciling credit card statements. Credit card reconciliation is similar to bank reconciliation, but involves comparing credit card statements with the company's records. The process includes matching charges on the statement with company records, identifying discrepancies and investigating their causes. What are the common challenges faced during account reconciliation? Common challenges include high volume of transactions, can be time-consuming. Human error, mistakes in recording transactions. System errors, issues with accounting software or bank systems. Fraudulent activities, unauthorized transactions. What is the difference between bank reconciliation and account reconciliation? Bank reconciliation specifically compares the company's cash book with its bank statement to ensure they match. Focuses on cash and bank transactions. Account reconciliation, a broader term that applies to reconciling any general ledger account, such as accounts receivable, accounts payable, or inventory. Involves matching internal records with external documents or third-party statements. How do you prioritize accounts for reconciliation? High-value accounts focus on accounts with large balances or frequent transactions, as errors here can significantly impact financial statements. Critical accounts reconcile accounts that are essential to the business's operations, such as cash, accounts receivable, and accounts payable. Aging accounts give priority to accounts that have not been reconciled for a long time or have known issues. Regulatory requirements prioritize accounts that are subject to regulatory scrutiny or audit requirements. What steps would you take to reconcile an account with a large number of transactions? Break down transactions, analyze large transactions for accuracy. Use reconciliation software, automate the process. Implement strong internal controls, prevent errors and fraud. Regular reviews, conduct frequent reconciliations. Next topic is accounts payable and accounts receivable. What is the process of accounts payable? Process of accounts payable. Receive invoices from vendors. Verify invoices for accuracy and approval. Record invoices in the accounting system. Prepare payments to vendors. Reconcile accounts payable periodically. How do you handle vendor invoices? Receive invoices promptly upon receipt of goods or services. Verify details like quantity, price, and terms. Obtain necessary approvals for payment. Record invoices in the accounts payable system. Schedule payments based on due dates or terms. Explain the concept of invoice discounting. Invoice discounting involves a company selling its accounts receivable to a third-party financial institution at a discount. The company receives immediate funds rather than waiting for customers to pay their invoices. What is the process of accounts receivable? Issue invoices to customers for goods or services provided. Track and record accounts receivable in the accounting system. Monitor payment due dates and follow up on overdue invoices. Receive payments from customers and record them. Reconcile accounts receivable periodically. How do you manage customer credit limits? Set credit limits based on the customer's creditworthiness and history. Regularly review and update credit limits as needed. Monitor customer payment behavior and credit utilization. Use credit management tools to assess risks and manage exposure. What is bad debt expense? Bad debt expense is an expense incurred when a customer defaults on payment, and the company determines the debt is uncollectible. It reflects the portion of accounts receivable that the company does not expect to recover. How do you handle customer disputes? Promptly address customer concerns or complaints. Investigate the issue thoroughly, involving relevant departments if needed. Seek a resolution that is fair and acceptable to both parties. Document the resolution process and follow up to ensure satisfaction. What is the difference between factoring and invoice discounting? Factoring involves selling accounts receivable to a third party at a discount. The factor manages credit control and collects payments directly from customers. Invoice discounting involves using invoices as collateral to obtain a loan or cash advance from a financial institution. The company retains control over credit management and customer relationships. Next topic is Tally software. What is Tally accounting software? Tally is a comprehensive accounting software widely used for financial accounting, inventory management, and compliance tasks, developed by Tally Solutions Private Ltd. What are the basic functions of Tally? Basic functions of Tally. Financial accounting manages bookkeeping, ledger entries, and financial transactions. Inventory management tracks stock levels, purchases, and sales of inventory items. Taxation facilitates GST compliance, including calculation, recording, and filing of GST returns in India. Banking supports bank reconciliation, cash management, and check printing. Reporting generates financial reports like balance sheets, profit and loss statements, and cash flow statements. How do you use Tally for generating financial reports? Using Tally for generating financial reports. Data entry input all financial transactions accurately into Tally. Ledger maintenance keep ledger accounts updated with transactions. Report generation navigate to report menus, select parameters, and customize formats. Printing or exporting print reports or export them in formats like PDF or Excel for analysis and distribution. Review and analysis review reports for accuracy and use them to analyze financial performance and make business decisions. Next topic is bookkeeping. What bookkeeping methods do you prefer and why? Sample answer: I prefer the double-entry bookkeeping method because it ensures accuracy by recording each transaction twice, once as a debit and once as a credit. This method helps maintain balanced books and provides a clear audit trail. What is the difference between single-entry and double-entry bookkeeping? Single-entry bookkeeping records each transaction as a single entry, typically in a simple format like a cash book. It doesn't maintain a balance for each account. Double-entry bookkeeping records each transaction with at least two entries, a debit to one account and a credit to another, ensuring that total debits equal total credits. It provides a complete financial picture and supports accuracy checks. Explain the basic accounting equation. Assets equals liabilities plus equity. It shows that assets are financed by either liability or equity. How do you ensure accuracy and completeness in bookkeeping? Use standardized processes and accounting principles. Reconcile accounts regularly to detect and correct errors promptly. Maintain supporting documentation for all transactions. Implement internal controls to prevent and detect errors or fraud. Regularly review financial statements for accuracy and completeness. How do you handle errors in bookkeeping? Identify the error through reconciliation or review. Determine the type of error. Correct the error by adjusting the affected accounts. Document the correction with an explanation. What is the normal balance of assets, liabilities, and equity accounts? In accounting, the normal balance of accounts is as follows. Assets, debit. Liabilities, credit. Equity, credit. This means that asset accounts typically have a debit balance, while liability and equity accounts usually have a credit balance. This applies in India, as well as in most accounting systems globally. General ledger and balance sheets. What is the purpose of a general ledger? The purpose of a general ledger is to serve as the central repository for all financial transactions of a business. It records and categorizes all entries into accounts, providing a complete and accurate summary of the company's financial activities. The general ledger is essential for preparing financial statements, tracking financial health, and ensuring accurate financial reporting. What is your experience with maintaining the general ledger? Sample answer: I have extensive experience maintaining the general ledger, including posting journal entries, reconciling accounts, and ensuring accuracy in financial reporting. I regularly review the ledger to ensure all transactions are recorded correctly and make adjustments as needed. How do journal entries affect the general ledger? Journal entries record individual transactions with debits and credits in the general ledger. Each entry updates the respective accounts, reflecting changes in financial positions such as assets, liabilities, and equity. These updates accumulate in the general ledger to provide a complete record of all transactions. Explain the process of closing the general ledger at the end of an accounting period. Post transactions. Ensure all transactions for the period are recorded and posted to the general ledger. Prepare trial balance. Generate a trial balance to verify that debits equal credits. Adjust entries. Record any adjusting entries for accruals, deferrals, or corrections. Close temporary accounts. Transfer balances from revenue and expense accounts to retained earnings or capital accounts to prepare for the next period. Generate financial statements. Prepare financial statements like the income statement and balance sheet based on the updated general ledger. Roll forward balances. Carry forward the ending balances of permanent accounts to the new accounting period. Next topic is balance sheets. What is your process for preparing a balance sheet? Sample answer: I prepare a balance sheet by gathering data on assets, liabilities, and equity, ensuring all transactions are recorded and reconciled. I categorize and verify each item, calculate totals, and ensure the balance sheet balances. How do you ensure the accuracy of balance sheet figures? Sample answer: I ensure accuracy by performing reconciliations, cross-checking figures with supporting documents, and conducting variance analysis. I also review the balance sheet for compliance with accounting standards and consistency with other financial statements. Describe an issue you encountered while preparing a balance sheet and how you resolved it. Sample answer: I encountered discrepancies in fixed asset records. I conducted a thorough review, identified misclassifications and recording errors, and updated the asset register. Regular communication with the asset management team helped resolve the issue. What is the difference between debit and credit? Debit represents an increase in assets or expenses, or a decrease in liabilities or revenue. Credit represents an increase in liabilities or revenue, or a decrease in assets or expenses. Our next video covers the most frequently asked junior accountant interview questions and answers for both freshers and experienced candidates. We will also delve into other categorized, top job-oriented topics to help you prepare effectively.